Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold over the US dollar chart. Now, as you can see in today's trading session, we have gone towards the upside. We currently find ourselves trading up at 1787. So this means we've added roughly 12 points here in the gold markets as we were trading down at roughly 1775 in yesterday's trading session. Now, I think gold is just really trying to figure out where it wants to go next. You know, we've had a whole week of downside movement here in the gold markets. We've closed below the 200-day. We've triggered that 1775 area. So, you know, I wouldn't be surprised whether we were to continue our breakdown going into next week down towards that 1700. But that being said, last night we had Yellen, who announced that she is in favor of a larger stimulus deal, and that the Fed should do it right the first time. Not just the Fed, sorry, the US government should do it right the first time and not have to do a third stimulus. You know, just do a massive second stimulus, do the job properly the first time, and that will really get the economy going. So that was actually a surprise to many, and of course that then benefits gold, because if the stimulus deal was going to be larger, that means more printing of the US dollar, which would then of course devalue the US dollar, and that is what benefits gold. So, you know, we could see gold here trade back up towards 1800. But as I've mentioned, I'm now sitting on the sidelines. I don't hold any positions at all in gold. I'm really waiting to see where it goes from here, okay? We could trade down towards 1700. I'm not going to short the markets due to the fact that they are fundamentally very strong still. However, I would happily buy down at 1700, which would mark the bottom of this holding pattern that we've been trading in for the past 4 to 5 months. But on the flip side, if we traded up towards the 200-day EMA and got a daily close, you know, in between the 200-day or even better above the 50-day EMA, which is a red line on your screens, this is an area where I would equally buy as well, trading back up towards the swing highs up at 1950. And then if we broke above this level here, that's when we go back towards the all-time highs up at around 2068. But as I mentioned just a minute ago, I am sitting on the sidelines here in the gold market. Sometimes the best trade is no trade at all, and I feel like that is a perfect saying for this moment in time. So I'm going to stay on the sidelines, keeping an eye on the RSIs while the RSIs approach the oversold territory. So, you know, gold may struggle to break down more from here, you know, so we may get that close back above the 200-day EMA. I think the proof is in the pudding will be the movements that we see in next week's trading. So next week will be very, very important for gold. I said that last week about this week, and as you can see, we've had a huge development in the gold markets. That's breaking below the 200-day EMA. Now next week could be even bigger, which will tell us where the gold markets want to go next. So I am sitting on the sidelines and waiting patiently.